Support and resistance are one of the most important key levels in trading, but a lot of people get it wrong. A lot of people do not understand where exactly should they put their support and resistance levels, and a lot of people do not understand how to find bias based on these levels. So, in this video, I'm going to cover the following points: how to draw perfect support and resistance levels. Second, I'll cover how to find bias with the help of this level. Third, how to take trades with the help of this level. So these are the secrets which will cost you a lot if you try to do it from some paid course. But I'm going to teach you all of this for free. So make sure you pay attention and stick with me till the end of this video. So let's get started. We are going to look at Euro GPY pair. So let's start marking this level. And while we are marking this level, I'll also run you through with what thoughts I go through while marking these levels and what are the requirements of these levels. How do you find out? How do you know these are the right levels? So now, previously, let's say when the market didn't create this just 5 days before, the swing high, this area was a kind of resistance level. But as soon as this structure is created and has been used to reject, this area is now your resistance level. This is much perfect and much cleaner resistance level. We can just use the top value, the top line until we have more structures around here. We can use this exact point value to create our resistance. And now when we go down below, we can mark this level as another resistance or support. Right now, this is going to act as resistance. So anyway, they are the same for me because these are just key level areas from which price finds direction and also rejections. So these are very important levels for us. Now let's mark this level. I'll also run you through why I'm drawing these lines. Now you can see there is this resistance right here. The price came till here and till here and rejected from this level to go down. Now, this shows that a lot of sellers are sitting around this area. And maybe if we go down this direction, you can see right here as well, when the price was moving down, it went up like this level acted as a magnet. It went up and took a lot of liquidity where sellers came in again and pushed the price till here. So that's what support and resistance helps with. You can see around this level as well, even though it didn't go all the way till here, it just returned from a small distance. And you can see there is a rejection right here. And then there is a lot of consolidation around here. There is a lot of consolidation the way this price action was doing, moving in a structure. But right here, you can see a lot of candles rejecting. Now, these are 4-hour candles. That means price stayed around this area for a very long time. So these are 1, 2, 3, 4, 5 candles, almost 6 candles. Yeah, 7 candles. So it's more than a day. Price stayed here for more than a day. So you can understand the kind of meaning it has around these levels. So these are very strong levels. Right here, the price rejected so fast. Price moved down in a really nice fashion. Now, let's switch back to daily time frame. We can see there is this low right here because this low is recently formed, and we can see there is more touches here. So we are trying to cover the least. And then we have more touches around this level. The price came here and rejected. So of course, we'll try to cover this as well, this point. And right here as well, the price came here like this green candle is so big, but even after such big momentum where this is engulfing almost 2 days of price action, the price moved down in a really nice way. This is what these levels mean. These are very important levels. Now we can try to mark more. I can see that this level is somewhat there, but it's not looking so clean to me. But I have this level as well. On the smaller time frame, I'm sure this is going to give a much better structures. Look at it. Yeah. So you can see this is a good support level on 4-hour time frame. So what I do is most of the time I have a clear way of doing it. I have made templates and this is what you can follow as well. You can do this daily. Let's say D represents daily and you can just say S/R because once this level is broken, this can be resistance or else it can be support, anything. I mean, these are just important levels. So it is S/R support or resistance. Now I have templates made for this. So what I do is I simply go in this, I click here and I select daily SR, right? I'll mark this line as well, daily SR. What you can do is you can just go type it out and save it as a template. Save as, that's it. This is how you do it. And then we have 4 hour as well. Similarly, it's the same way of doing it. You can also go on weekly time frame and mark out your support resistance levels. But as we can see, this the price is at a very high level. The price is at one of the top highs where the price never went before. It's just here, and then the price right now is here. Price might continue bullish momentum again. We don't know. It might be just making structures, right? There is a bullish momentum. There's a trend going on. It might just continue going up. We don't know any of it. So we'll see. But this is how at the end you start your analysis. And I'll tell you how to find the bias as well. Now we can see this, that this is support on 4 hour time frame. The price has rejected this level, and around this level the price has consolidated a lot, right? Of course we can mark this level as well on 4 hour time frame because there is enough touches, 1 2 3 4 and almost this one 5. If we try to cover as many we can, yeah, we are able to. Yeah, so this is again a 4 hour support, right? Now, I hope this is clear how to mark this support resistance line. The goal is it should be a level where you see reversals, rejections, good rejections, and a really nice momentum, right? Where rejections are happening, or maybe it is acting as a spring. For example, as soon as the price touched here, it acted as a spring and the price just moved up in a really nice way. Again, it touched here, the price acted as a spring and now it pushed up. Now, around this level, the price touched here, and as soon as it touched this area, it rejected really nice way, right? This is a really nice movement. And again, right here, the price moved down in a really nice way. Now, after so many consolidation, you can see the price movement really went slow around this area. It did a lot of consolidations. And then after all of these consolidations, it finally broke it, but only to come back in a very short period. Now it is retesting this level. Now it is retesting this level and continuing its movement up. At this point, the market reached a psychological and a previous high kind of area, right? It's an area because from this to this is the exact high around 500, so 175.500 below that area. And this is exactly 175 psychological level 175. So from that area, the price rejected nicely. So you can understand the amount of pressure this level has, the amount of pressure the price, consolidated and moved in a very slow speed. If we try to see it, how many days it took to go from year to year, it took around 17 days, 18 hours. And how much time did it take to go from that top to bottom? In a matter of 2 days, 12 hours. That's how much time it took for the price action to come back down, right? From year to year. Now, imagine the kind of movement this level carries, and that is why we'll see that whenever the price comes back here again, we'll definitely see some kind of price action until there is some maybe NFP news or something like that trying to push in a normal way. When the price is just dealing without fundamentals, the price might come here, but it will very soon reject to move down. I hope that's clear. So these are very important levels, the levels which are just swing highs. This is a swing high where the price from here went up to reject all the way to this level. Then again it tried and it got rejected to a shorter level, but that means a lot of sellers are still sitting here. Now, as soon as the price dropped, again the price used this level to reject. Now, what do we see? What we see is that on the weekly time frame, the price has created a new higher high and might be just creating a new higher low. But from year to year, price was moving in a really nice momentum. Without a single red candle, the price moved up till here. Okay. And then it goes down. We see a very similar candle actually. The price has moved down and then it might come back again to move up, right? Just like this candle, the price might come back again to move up. Now, on the 4-hour time frame, we see this. There is a resistance here and there is a support here, right? The price is right now creating lower lows, not higher highs, but lower lows because the structure is bearish now. This structure is bearish. This was kind of your higher low and this is your higher high. You can have many more higher lows around this area anyway, but this is definitely your lower low and this is your lower high. And similarly, this is your lower high, this is your lower low, and this is as well your lower low, and this is your lower high. But we see a small structure change, but the swings say differently, right? The swing is very bearish, but on this, when we see the structure very closely, we see that market has done this. The market has created this and then it did this, and now the market is doing this. So in short, there is a change of structure here, and now it's going up like this. So in terms of swing, the market is bearish. In terms of lower lows, lower highs, and everything, technically the market is bullish. Now this is a good level from where the market might start continue going up. You have to understand, you have to look around the history. You can see what kind of levels are used to continue the momentum up. You can see the market is right here. Like it went up from here and then found some liquidity around this area to continue momentum up. And before doing that, it has taken liquidity again from around this level to continue its movement towards upside. Now, around this level, we can see it is doing something similar. The market took liquidity from around this level and it went up. And then, even though this high was right here, this high was right here, and then it took liquidity from around this level. The market has taken liquidity from around this level, but after touching the high, right? It is not falling so easily. So these are the steps which market will kind of do, and it has done here as well. Before going up, it took liquidity from exact around these levels and then continued its momentum to break the resistance. Now, as the market is bullish, but at a higher high, so we need to deal cautiously. We can understand that this is a 4-hour support. This is a local support area, right? This is a 4-hour support. So we might soon see price coming down. We might soon see. Understand this. We might see price coming down. And if we see price coming down, what we can expect is price to reject. If we see rejections around this level, exactly like this, on 4-hour time frame, if we are seeing rejections, we can look for entry. We can look for entry. Now, as I said, I'll tell you why we mark this support and resistance levels. I'm also teaching you what's the correct way of doing it. You have to cover as many touches as you can. So we are trying to cover this touches where the support is, let's say, right here. The support is present where it kind of went max around these areas, and also it's trying to have as many touches as it can. So we are seeing 1 2 3 4. This is almost 4 but not so good one, but we are seeing 4 touches, right? And a price action which is completely repeating itself. So we can expect that repetition, we can trade based on that. So what kind of trade you want to be in? The daily time frame is bullish, the weekly time frame is bullish, right? You can see right here the daily time frame. Yeah, this is your higher low. This is your higher high. Even in the big terms and the body terms, the market is still bullish. It might just be creating a head and shoulder, but we don't know yet. The market might continue its momentum to cross the resistance. Now, what we do is we just go down to lower time frame. We try to find entry based on the information we have. We have seen the market has laid out really nice on 1 hour time frame around these levels. It's kind of repeating right here, The market went down, the market went down, and then the market created a lot of consolidation and then finally touched this area again to go up from right here. But the market has not touched this level so far yet. So what do you want to see in the market now? You want to see this price action. You want to see price to come here, retest this level to continue going up. It's as simple as that. This is how you find bias. How do you find bias? You see that your weekly time frame is bullish, your daily time frame is bullish. Why would you trade in an opposite trend if the market is telling you that the chances of bullish is much more, right? Your daily time frame, your weekly time frame is bullish, your 4-hour is almost technically bullish now, and even 1 hour is bullish. 1 hour time frame is bullish. So almost all your time frames are in sync. All you want right now is the market to come down and reject this level. Now, what kind of rejection you want to see? This is 1 hour time frame. If the price goes up and comes down, then of course it has created a lower low, right? Because this will be your higher low, and if price goes up around this area, this will be the higher high. And now if when it is coming down to touch this level, that means it is creating a change of structure, and that will be a lower low. Now 1 hour won't be bullish. 1 hour won't be bullish at this point. But what you can do is you can also rely on 30-minute time frame at that point. You need to make sure at least 30-minute time frame or 1 hour time frame is bullish when you're entering the trade, because that is how you want to enter. For example, right here we can see the price action 1 hour time frame was in a swing way bullish. Right here I can see it was technically bearish because it created a new high and then it created a lower low. In terms of wicks, it didn't, but in terms of body, it created a lower low. And I don't count wicks so much. Anyway, this was a lower high. This is a lower low. Now, on 1 hour time frame, this created a higher high. So, this would be a good point to enter on 30-minute time frame. On 1 hour time frame, this point would be a good point to enter, but then the stop loss would be way too big. I want you to at least have 1 is to 2 around this area. That's it. So you have to understand this. If the trade is not fitting for you, don't take the trade, right? So if 30 minutes does something like this, like it did around here, you have to wait for price action to do this and maybe change of structure on lower time frame. And then you can enter around this point or maybe wait for another lower high to enter around this point with a entry signal for the price to go up till here at least. You have to keep your stop loss as tight as you can. You can just put a buy limit maybe around here. That will easily give you a good 1 is to 2 at least. For example, let's say if we enter around here, we keep a stop loss around here. At this point, I am not sure we get 1 is to 2. But if we can put a buy limit, something like this, and try to get 1 is to 2, then it's a really great momentum. So don't try, make sure that you at least get win rate on 1 is to 2 on such kind of trades. I actually lost myself. This is a video which you'll get a little late. So of course this trade might have happened. But this is how you trade. This is how you look for structures. This is how you use history to find relation of how price action moves around this area, around this support. Everywhere on every support and resistance levels, price action moves differently. You just have to make sure when you're creating these levels, first of all, you need to mark these levels. If these levels are not marked, you won't be able to ever find trades like this. And the reason behind this is once you have these lines marked, you can see the candles, the charts, the pattern very clearly. Once you have these lines marked, you can see how many times the price action has acted around these areas on different time frames, how these price actions are really reacting around these levels. So based on that, you make decision on what kind of trade you want to be in. It's as simple as that. Based on this price action, the way price has acted in the past, and trust me, all these people, all these top traders you see, your trading gurus, they follow, they look at market history, and based on it, they define their price action. What price action they want to see. And if the price action doesn't do according to what they had planned, they will not enter the trade. I hope that is clear. So these are some of the most important secrets that everyone should practice and become efficient in it. All these things can be done really fast. You don't need 20, 30 minutes to find out what kind of this trade is, what kind of trade can occur on this pair. Is just mark these levels, try to practice on all the different kind of pairs and try to mark these levels very clearly. You can see on daily time frame, as soon as I move on to the daily time frame, I can clearly see these levels, right? I just have to zoom in enough and I can clearly see these levels and I can mark them. I move down to a smaller time frame. I can clearly see these levels that these are swing lows. There is a consolidation around this area and then there are some highs around this area, right? But I want to capture the recent price action around this area, right? That's why my level at 4 hour time frame is right here. There is a price action right here. There is a price action right here. There is a price action right here. And there is a lot of consolidation and rejections around this level. So I can see it's a clear, easy way to mark these levels. I hope this is clear. And this also creates a zone. When these two lines are so close to each other, you can use it as a zone for you to make sure that when you're trading, you buy above these zones. Now, what happens is, the reason I'm telling you is, let's say trade went around here and you bought around this area. You bought exactly around this area. If you were to be in a trade where you bought around this area, and this is the swing low you're covering, right? Now you want your price action to go 1 is to 2 or something like that. And maybe 1.9. Let's say 1.9. Because this is what the price action is giving us. And now if the price has to hit your stop loss, it has to break two support levels. Imagine that. It has to break two support levels. So it gives you a different kind of confidence that these support levels are not easy to break. These support levels are really good ones and it's not easy to break. This is how you make sure of it. I hope this is clear. And what I want you to do is go on different pairs, try to mark support resistance levels, watch this video again and again, try to see how my thoughts run when I am trying to analyze these pairs on Sunday. And I also upload these videos of weekly outlook on every Sunday. So make sure you watch that video, because even in these videos, I am teaching you the exact same thing. It's just that I am trying to cover as much as I can. I am covering 7 pairs, 8 pairs in 40 to 50 minutes. But for this video, I am spending around 30 minutes just to explain you that how to use this support resistance levels, how to mark these levels, how to trade around these levels, and how these levels gives you a good bias. I hope this is clear. Make sure you like the video and make sure you subscribe so that this video reaches to more traders. And thank you for watching. I'll see you in the next one.